Good evening, everyone. It's 7 in London. That's 2 American Eastern time. So the second half of the American trading day well underway. This is the SPX. Now, earlier on this afternoon, I did a fairly long video on the position of the SPX, I just want to do a very short video today on a hobby horse of mine, which is the Fibonacci levels. And it's just been the most remarkable day. It happens a lot, but maybe not as often as today. This is a 5-minute chart. This is the pit session only of the SPX. No intraday data here. So it looks quite different from the chart that you'll see on IG Index, for example, because that carries the overnight data, and that clouds the issues. So I like to look at pit data. As you can see, this market, that's last night, and there's the gap open this morning, and it went right up, and we got what technicians would refer to as a tweezer top at the 78% retracement. Now 78 is a very important number in the universe. It's the square root of the golden section, 0.618. The square root is 0.786. Very important number. That coming off that level, I wasn't bright enough to get that, but I shorted it onto that low, and it fell very nicely indeed. Okay. And it fell quite hard, in fact. Now, a few minutes later, the same darn thing happens again, and as you can see, from that high down to this low, market in fact goes, do it properly, David, goes to exactly the 78% retracement. Again, tails on the candle. We got an inside 5-minute candle, and then it broke down through that low, and it fell very nicely again. On this occasion, the bulls came in and bought it at 78%, but all was not done for the bears, because they in fact did the same thing again, and came off the 78% retracement after charting a 3-wave up. Now, this pattern was made famous by a gentleman by the name of Harold McKinley Gartley, and he's one of my great trading heroes. If you Google Gartley 222, you'll get an awful lot of stuff. It's a drive down, and then it's a 3-wave pattern up to there, back down to here. It was first taught to me, and the name was given by a dear friend of mine called Larry Pesavatis, up to here. As I showed you a second ago, that's a 78% of this. So that's a particularly good pattern, and it came off that 78. I wish I had the strength to sell it at the level. I didn't. I sold it just after this. You can see that. What's that called? Shooting star, I think it's called, down below that, and it's now falling very strongly indeed. Now, there are some very important levels down here, folks, and if the S&P were to fall through those levels, as I spoke about this afternoon, then it can probably pull back for a few days. Nevertheless, 3 particularly good shorts on a 5-minute chart. These trades are only held for a few minutes, and on this one, my stop is already at entry, and I can't lose any money on the trade. But I thought I would just do a quick video on the power of the 78% retracement. Many pieces of software don't even have the 78% on their software, because it's not that well known. But markets, especially aggressively traded markets, tend to stop at that 78% retracement to the tick. If you see a 78% retracement and then a little bit of confirmation in whatever time frame you're using, then you've got a high probability, low risk setup on your hands. So I hope you found that useful. Thank you very much.